I now hand the conference over to Mr. Raghunandan NL from Emkay Global. Thank you, and over to you, sir.
Thank you, Neerav. Good morning, everyone. On behalf of MK Global, I welcome you all to Ashok Leyland Quarterly Results Conference Call. I'm very happy to introduce the Ashok Leyland management team today. We have with us Mr. Vipin Sondhi, MD and CEO, Mr. Gopal Mahadevan, Full-Time Director and CFO, and Mr. K.M. Balaji, VP Corporate Finance. Thanks again to the management team for taking out time today. We will start the session with opening comments from the management, followed by Q&A. Over to you, sir.
Thank you very much. Dear friends, my apologies first for a slight delay as we were trying to get connected, but it gives me immense pleasure to welcome you to the Ashok Leyland FY20 post-result conference call. And although Gopal and Balaji, my colleagues, and I would have liked a face-to-face interaction with all of you, the current situation, as we all understand, requires us to interact through this virtual medium. We did interact earlier this month during the launch of Avatar, our new BS6 MBB platform, and I do thank you very much for participating in that interaction as well. Let me, in the beginning, quickly run you through the Q4 and full year performance. The FY20 MHCV TIV was sharply down, as you are aware, by 40%, owing to the general slowdown of the economy and also on account of change to the BS6 emission norms from the 1st of April 2020, and now as well because of the unanticipated effect of COVID-19 sometime in mid-March. Q4 was impacted the most, with Q4 MHCV TIV down to 48,604 vehicles, which was lower by 57% as compared to the same period last year, which was at 112,413 units. For the full year, Ashok Leyland's market share was 31.8% vis-a-vis 33.8% in the previous year. While exports lagged owing to the reduced demand in our core markets, but LCV was a great bright spot all through the year, where we continued to gain market share. The rising confidence of customers in LCVs augurs well for the future, especially with the soon-to-be launched Phoenix project. For the full year, our revenues were at 17,467 crores, as against 29,055 crores in the year gone by. Operating PBT was rupees 518 crores. PAT for the year was rupees 240 crores, and the full year EBITDA was at 6.7% in FY20 versus 10.8% the previous year. Our closing operating working capital was negative at approximately rupees 700 crores, vis-a-vis a negative of approximately rupees 400 crores in the previous year. Capital expenditure in FY20 was at rupees 1,227 crores. This is lower than the forecast given by us at the beginning of the year. Debt, as on the 31st March 20, was at 2,005 crores versus a cash surplus of rupees 715 crores the previous year. Gearing at the same time was 0.3 times. With this brief, we are open to questions, and thank you very much for joining us once again. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The first question is from the line of Kapil Singh from Nomura. Go ahead. Kapil Singh, I request you unmute your line for me.
Hello. Sir, can you hear me?
Yes, we can. Yeah.
Okay. Thanks, and congrats on a great set of numbers under very tough circumstances. So, firstly, I wanted to check, we have seen a very good improvement in average realization per vehicle, and also the gross margins have seen very good improvement on a quarter-on-quarter basis. Anything to call out or some color as to why that has happened?
Gopal, would you like to take that, and I'll add in if necessary?
Hello.
Hello, is Gopal there?
Can I take that question, sir? I think Gopal is...
Balaji, please go ahead.
Yeah, actually...
Yeah, I'm there.
You are there?
Sorry. Yeah, go ahead.
If you look at, there has been a significant shift in the mix, Kapil. Especially, the higher tonnage vehicles, the number of vehicles which have been invoiced in Q4 is much higher than the Q3. There has been a 9% shift. Roughly, 1,000 vehicles have been shifted from the ICV and haulage to the higher tonnage segment, tippers, tractors, and MAV. That is why you are seeing a sharp rise in the average realization per vehicle.
Okay. And on the gross margin?
Well, that is why what has happened is we have been able to get some good discounts also from suppliers at the year end. That is why you're seeing the raw material costs not really getting impacted. And as Balaji had mentioned, we were able to get better realizations of this mix. See, one of the most important things about this performance also has been that we transited out of BS4 into BS6 with no inventory at all, either at the company's end or at the dealer's end. And so we were not in the pressure to sell. You see, so we wanted to ensure that we had the longer term, larger purpose in mind instead of trying to push inventory into the dealers, which is why we've seen that the realizations were better. We also had a better handle on our raw material costs and the other costs as well, due to which we've seen the margins actually getting better.
Okay. And sir, secondly, I wanted to check on, we have seen some intercorporate deposits, roughly 500 crores.
Yeah.
Where is that?
No, this is only to group companies, and actually what happens is, as on, while our MD, Mr. Vipin Sodhi had mentioned, the number of debt, which is correct, which is 2,000 crores approximately, that is the net debt. The gross debt was nearly about 1,100 crores more, and we had to have we wanted to ensure that the surpluses are passed more effectively. So we had 1,000 crores and odd in bank deposits, and we had 500 crores being given to the group companies, which are individual group companies. There's no issue on the repayment, and we are getting a much better deal. So what happens is, we would continue to do that till such time we have surpluses. As I'm speaking to you now, we have a surplus of nearly about 900 crores. This is the side of the intercorporate deposit that we placed. So what happens is, we are able to astutely manage the returns between a bank deposit. Of course, the predominant part of it is in bank deposits or overnight mutual funds. What we also found was that, with the turmoil in the market, it is better to have some steady state return, which is why it has been good.
Right. So, there was no option to reduce the debt instead of...
we lost you, Kapil.
Sorry?
We lost you.
No, I'm saying, was there an option to, instead of having these deposits, reduce the debt?
No, you see the debt has been taken as a measure of creating a. This has been there, in the past as well. If you look at the annual report, we would have used that as a mechanism to provide liquidity to some of the group companies. But more importantly, it is not to provide liquidity to the group companies. It is more to provide an avenue for parking our surplus. So what we are doing is when they require, instead of borrowing from a bank, if they require it, they borrow from Leyland, and these are short term, and then they get replaced. And for us, what happens is it creates liquidity for Leyland, because what happens is you have sufficient money in your arsenal. You keep some in deposits with banks, you keep some with the group companies, and so you have there is something called as gross debt and net debt, which you folks understand. So it is better to have a higher gross debt and a lower net debt and have the spread as liquidity, especially in COVID time. So that is the treasury strategy that we follow.
Okay. And so lastly, can you comment on the financing business? What is the moratorium trend we are seeing for Hinduja Leyland Finance, and do you see any need for infusing liquidity over there?
At the moment, I think the Hinduja Leyland Finance is doing exceptionally well, and while some of the customers have taken a moratorium, I think it is being done account by account, and after getting into specific arrangements with them, we do not see any liquidity issues with Hinduja Leyland Finance at all. They have sufficient lines, banking lines arranged. And secondly, I would say that the operations are being tightly controlled. We have no significant issues to report at all at HLFL. In fact, HLFL is doing very well under the circumstances.
Is it possible to disclose the moratorium number? Like what percentage of book or customers have taken moratorium currently?
I don't have the numbers readily, but it is not hugely significant.
Okay. Right. I'll come back in the queue. Thank you so much.
Sure.
Thank you. Next question is from the line of Abhinay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. Just on the intercorporate deposit, which are the group companies that you have given this money to, and when do you expect repayment on that?
Let me put it this way. You see, these intercorporate deposits are even treasury strategies for us, and these companies will be able to repay the money if we ask for at a suitable moment in time. These keep changing, but these companies are HNPC, where we have a shareholding of 14%, and then you have NXT Digital. So there are 2-3 companies in this division. Like I mentioned to you, it is a win-win for both, because what happens is when you place the deposits, you are getting a yield of nearly about 9.5, 9.8, sometimes 10.55. In fact, earlier we were getting yields of 10.55%. And when you have a surplus, you must understand, from February end, we started to consciously build reserves, right? And we wanted to build cash reserves. When you're building cash reserves, what happens is you borrow at something like, say, 7.5, 8 quarter, and then you put it in bank deposits, which is at 4.3, 4.4, so you have a negative carry. So what we have done even in the past is whenever we have had surpluses, we have used the opportunity to park these monies in intercorporate deposits so that it will yield us better return and help us to lower the cost of funds. And if necessary, whenever Ashok Leyland requires the money, these companies will ensure that they pay it back. And that is where we don't give it to any other outside parties. We give it only to Hinduja Group companies, because we know that the money will come back as and when we require it. It's as simple as that.
Yeah. So the key will be that these companies should also have the liquidity, like in case a Leyland needs it urgently, then they...
No, they have sufficient lines. You see, what happens is, that is the advantage of being in a large group. What happens is, one, we are able to have a win-win for everyone, and for Leyland also it is benefiting, because what happens is, imagine, as on 31st of March, like I told you, we had over 1,000 crores of liquid cash, even though we had borrowed. So our gross borrowing were in the range of about 3,100, 3,200 crores. So, and then we had ICDs already placed. So the net, actually the disposable cash that we have was roughly about 1,100 crores plus another 500 crores, which is about 1,600 crores. Why do we have such an amount? Because when COVID is starting, it is important for us to have adequate reserves. And that is why we said that, no, let us continue with this deposits. We had extended it. And instead of those companies going to a bank, they have borrowed from Ashok Leyland. And in the event Ashok Leyland requires the money, they will borrow from a bank and repay. So it's not as, it's a very simple transaction. It's not anything more than that. So for us, it's a win-win. Both companies get to win on this.
Yeah. So, anything on the sort of the credit rating of these companies? Because that'll also be an important leg over here, right? That whether these companies were high credit rated or anything on the sort of the credit rating.
I think what is important, I would say, is that you see these companies. What is important for these companies is they are part of the group. So that is the most important thing for us, because then we know that we are absolutely sure about the money coming back. And these companies, have adequate lines if necessary to repay. Either there will be lines from the banks or from other lines. So for us, the comfort that we derive when we give this ICD purely because it is part of the Hinduja group. And this is nothing new. Please understand. We have given ICDs in the past. It has been disclosed in the annual report. The whole thing is done very transparently. And this is not something that we have done only in the month of March. But it is useful, especially in the current scenario, when Ashok Leyland is actually trying to mop up further funds. So when you want to have funds, like today, even though I'm giving them approximate numbers because these are in the middle of the quarter, but I have approximately about 1,000 crores. But even having said that, I have gone for an NCD. Why? Because we anticipate that in the event there is something, suppose you see the COVID situation is so uncertain that we need to have adequate liquidity to manage a company as large as Leyland. So when you do that, the best thing to do is to draw on our lines and even create long-term borrowing lines so that we can sail through this current patch efficiently. And when you do that, what do you do as an efficient treasury manager? You want to look at the following things: safety, liquidity, and returns. So when I put it in bank deposits, what I look at is safety, then I have to look at liquidity, and then returns. So we put it only into banks which we are very clear about and we also have working relationship with. When you go to the Hinduja group and when you are actually putting the ICDs there, I think all three parameters are, kind of checked off, because in a bank deposit, the returns are very low. But when you give it to an ICD, then what happens is you have both the safety of the group, the liquidity whenever you want it, you can get it back, and returns are also exceptional because this is at a much higher rate than our borrowing rate. So, for example, one of the CPs, for example, when I borrow CP today, it's significantly low rate. I can't even disclose some of the rates that they're getting it at. And when I'm able to place it in an ICD, say for example 9.5%, 10.5%, right, depending on the month in which you place it, I'm getting a clear arbitrage of 3% to 4%, which is extremely useful for a company like Leyland in current times because the negative carry is reduced. At the same time, you must remember, we are not putting all the things there because we want to ensure that we have a proper allocation of funding, which is why only a portion of the liquid funds are being placed into the deposit. Frankly, there is nothing more to this than efficient treasury management as well on this. Please be rest assured on that.
Yeah, and so do you see this trend sort of going further, like as you're raising more NCDs, the intercorporate deposits will also rise?
I don't believe so. Unless I suppose I end up having a 2,000 crore surplus, which I don't believe I will have. Then we will look at, but I don't think they're going to do that. See, this is a good mix to have. Like for example, even my own deposits, if you look at it, I will have it on 1 month deposit. Then I will have it in a bank I'll put it on 1 year deposit, where they will say prepayment is allowed. But then I will also have possibly 6 month deposit where no prepayment is allowed, but I'll get a slightly higher interest rate. So beyond the point, what you try to do is to ensure that first of all, your entire portfolio is, the safety is completely tied up. Then you look at liquidity from the banking sector, put it in 3 month deposit, 6 month deposit, maybe 1 year deposit, depending on the forecast that happens. Then when you look at it from liquidity aspect, the group companies, when we place it, we can take it on call, give them a notice of 10 days or 12 days and we are able to get the money back. And then the third one is the returns. So if I put it on a longer tenure in a bank, I get a higher return. If I put it on a shorter tenure in a bank, I'll get a lower return. But in the case of an ICD, what happens is I get 3 to 4% higher, at least 3% minimum, higher than what I am borrowing in. That means that part of the borrowal of 500 crores doesn't have a negative carry. It actually, that positive return is actually used for my overall treasury basket. This is how we have looked at this entire, we say, the entire portfolio.
Overall, I think the key is risk-adjusted return. But the second question on the what is your break-even capacity utilization rate now?
See, I think when you are actually in a COVID situation where the sales are quite insignificant, it would be virtually impossible to do a break-even analysis and tell you this is the number. All we can tell you is the following. In 2019-20, you've seen the results. It has been a tremendous effort that has been done by the team, both under the leadership of Mr. Hinduja, when he was actually leading the company for predominant part of the year, and after that, Mr. Vipin Sondi. And I think what we did was something which was good in the medium term. We ensured, first of all, zero inventory as we carry forward into the new year. We ensured that we reduced our overheads quite significantly. Our project K54-2 resulted in nearly 540 crores of savings in all types of overheads, including production, sales, administrative overheads. The run rate of our administrative overheads has come down sharply. Unfortunately, we had to also do a VRS, but this is part of the overall scheme of things. We did that quite well in advance, my dear friends. We must remember that. This was not something that was being looked at as certain, but we continue to work on our efficiencies. So rest assured that as we move into the new year, yes, these are challenging times. But for us, what is important is what are the things that we can do better? Why waste the crisis? So we are looking at this whole thing in a completely different way. We are looking at what we need to do on ultra short-term strategy, what do we need to do on short-term, what do we do on the medium term, and we are also looking at how do we improve the efficiency, effectiveness of the company. We are looking at each and every process in the company, each and every cost in the company, improving productivity. So there's a lot of work that is currently being done, and believe me, once this COVID situation is over, we believe that on people, product and productivity, we would come out much, much better. And we have launched some of the best products as well, and we are confident about the launch of, as our MD had mentioned, about Phoenix. So I think there's a lot of capability building that is getting done in the current situation. MD, would you want to add something?
Yes. Gopal, thank you. And actually, you've described it very well. May I add to that whatever we do, it will be frugal, it is disciplined, and is to ensure that we become stronger and stronger during this period. And just to add, in terms of new products, the Avatar is receiving a good traction. And of course, LCVs, we will be back to you and discuss it more in detail when we are ready with the launch of the Phoenix in the latter quarter. So we are ready on all fronts as the market gradually opens up.
Great. Thanks for the responses.
Thank you.
Thank you very much. Next question is from the line of Adib Bansal from Nippon India Mutual Fund. Please go ahead.
Sir, a couple of questions from my side. We have an impairment of odd 100 crores in FY20. This is pertaining to which entity?
There are two things that impairment is on account of Optare. See, what we are doing is, again, here, just want to clarify certain things very quickly. We have conservatively over these past few years, if you notice, we have been taking impairments even in good times. So we had impaired the investment in Optare completely, I think 2 years ago, and we had impaired even 50% of the investment in Optare. So as we continue to invest in Optare, which requires financial support, whatever investments are done, we take an impairment. Now, Optare as a company has got a lot of potential as well. It's a good company, great products, going through challenges because of two reasons. One is because even before COVID, we had the Brexit. It is based out of London, and we had seen the demand coming off in London. After that, we had Brexit. But let me tell you, here again, just like Ashok Leyland, Optare has got some very great products. It's it's shifting its entire focus onto electric, and it has successfully won the bid for UK's double-decker EV first. Secondly, we had an EV order, which is nearly about 110 buses in Dubai, which is again a very, very sophisticated market. These are extremely sophisticated buses. We had successfully delivered year before last, again, a very large order to New Zealand. So for us, what we are trying to do is to actually change the product profile of this company, and we have put in some of the best people of Leyland inside the company, and there is a very clear focus that this company is having to see how do we get that to a break even and move forward. We will at some point in time see some clawback of off-tire technology coming into India as well when our roads are ready for those, ultra-low buses. And EV is the technology of the future. Back to you.
Yeah, can I add, Gopal, if I might to that?
Please.
Yeah, no, I think you've summed it very well. I think the important thing is the technology that Optare has is a technology that there's lots of value in that technology, and it is the future as well.
Absolutely.
Then it is a matter of also, Gopal mentioned we've put some of our best people there. The important thing is how do we ensure that costs are managed in a way that this turns into a break-even. So it's technology, and the rest is about operational strategy, which we've put our best people there.
Thank you.
And
I think that is
and the other question I have is, what is the gross debt as on a current date after this NCD raise of 200 crores?
Well, the gross debt as on date would be about 5,400 crores or so. I'll give you the exact number. And we will have about 1,200 crores or so to that. I'll take it offline and give you the number. I don't have the number.
Sure. Thanks. That's from my side.
Thank you.
Thank you very much. Next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Gopal, just want your view now, on the state ordering from a buses side. So, what we are witnessing because of this situation, state transport is really in a flux. What's your sense? Because these are the orders which were saving us, at least from a fixed cost angle, what we were getting the orders in last 5-8 months pre this COVID. And second, on the demand on the MHCV side, though we were expecting the pent up last year, but even that didn't happen, and then this COVID came. And then FY22-23, where the DFC at least starts aligning with the country. Do you think the replacement cycle itself will be very challenging for the CV industry, at least for 1 to 1.5 years perspective? Just need your outlook on that. Thank you so much.
What I will do is I'll direct this question to our MD, and then after that supplement if any additional information is required. Vipin, would you want to take this?
Yeah, sure. The important thing here is, and it's a great question. I missed the first part on buses, so I'll address the second part and then try and understand the first one. As far as MHCV is concerned, they have their own. Within that, you have your own trajectories. The trajectory of, let's say, tippers and infrastructure does tend to move on. There is investment coming back, and therefore tippers is already showing an interesting possibility. So while it will take some amount of time, but we are about moving goods, and as long as goods continue to move, this pent up, especially in the last 60 to 90 days, there will be, in our view, I think by the next quarter we will start seeing some movement, but certainly by quarter 3 much more movement. And I think every quarter is going to be better than the other, and within MHCV each one of the sub-segments will have their own trajectory. What is important for us is to ensure that we have the right product range. And I think with modularity, which we call the avatar, this essentially puts the customer in a phenomenal position, because now, depending on the application that the customer uses his vehicle for, he can have multiple options of whether it's loading spans, cabins, suspensions, or drivetrains. We expect this to be a great driver for us. The second thing which is extremely important is the total cost of operation, the TCO, and within that, the fluid consumption. And why we are saying fluid is a combination of AdBlue as well as diesel. And we believe, based on tests, that ours will have the best TCO. So within the market, as it grows, we feel that we will be increasingly preferred by the customer. Your first question, and please correct me, related to, I think, state transport undertakings and the purchase of buses. Is that correct?
That's right. That's right. Yeah.
That's right. Yes, definitely. I think state transport undertakings did buy buses in the previous year. One of the suggestions by the body SIAM to the government and by Ashok Leyland as well is, as public transportation, which may initially have some amount of hesitation because of the health situation, but public transportation is public transportation, and therefore it is what our suggestion has been, that state transport undertakings be encouraged to buy more buses so that the initial hesitation may also, let's say, be removed. Because for sure, for moving the same number of people, more buses will be required. Where Ashok Leyland is coming in, we are, as we speak, launching a series of buses with common styling, with a common Ashok Leyland look, and with a significant amount of standardization. In fact, you'll see buses which are BS6 enabled and will all have a common styling and look. Internally, we can redesign it based on what is required in the current times. So maybe after an initial period, I think the bus market will also start opening up. Gopal, please go ahead.
No, I think you have said it, Vipin. I think that's our strategy, as our managing director has mentioned. So we can put the next one.
So just one more, if I can squeeze in. If you can talk about the capex and the investments for this year, and especially the investments of core versus this our lending strategy to group companies, being whatever the cycle we are in. And also, if you can talk about the percentage increase in BS6 vehicles, has that been passed on? Those are the three questions. Thank you.
I will just tackle one bit and hand over the capex bit to our MD, because he appropriately answered the question. There is no lending strategy to the group. I just want to make that very clear. We don't, there is no lending strategy. What we are doing is we are parking our surpluses, as I mentioned earlier, in a very judicious way, so that we look at safety, liquidity, and get the return from the overall market. That's about it. And these ICDs are secure, and we don't have, in terms of comfort that we have with group companies is high. We have no issues at all in terms of getting the money there. So now I'll hand it over to the MD for discussing on the capex and investment strategy, and I'll supplement anything else.
So thanks Gopal, thank you. Let me start with the fact that whatever we do it in a very measured and frugal manner. We are coming off a fairly large capex cycle because of the introduction of the BS6 and the Avatar, the MVP platform. The Phoenix is, for all practical purposes, also ready. So in a sense, our major capex cycle is behind us. What we will be doing as we move forward this year and next year is to ensure that the maintenance capex, which is significantly lower, will obviously remain in position, and any strategic issues for capex is concerned, we will thoughtfully consider and bring that forward. But the major capex cycle for the immediate is over.
And as far as the investment is concerned, Optare will require some support. So we will continue to do that, because I think we are getting to that point where we have got some very good products in hand. And, we are at this point in time globally, when I say globally, I'm talking about the financial position, the position of corporations. I believe that we are almost reaching close to the bottom. While there is a lot of despondency and that be there. I'm sure that things will pan out, and in years' time, we would have mankind would have licked one more challenge that was set before it, and there would be times when people will get back to doing what they are doing. And we have to be ready of doing these things in a different way. And Optare is also one such company which has got a good portfolio of products, and we'll see. We are confident that with the efforts that we're putting into the company, we should see it grow. But let's wait and watch.
Thank you very much. Next question is from the line of Gaurav Khandelwal from Mirae Asset. Please go ahead.
Thank you, team, for the opportunity, and I hope you and your team members are keeping safe. Gopal, one question to you. I think I missed the gross debt number. If I heard it correctly, you are saying net debt is 2,005 crores and gross debt is 5,400 crores.
No. That's what let me clarify. Thank you for asking this, because somebody asked the gross debt as on today, which is 26th of June, after our recent NCD. The gross debt as on beginning of as on 1st of April or 31st of March was about 3,100 crores, and the net debt was 2,005 crores. So we had approximately 1,000 crores of surplus, which has been placed as deposit. And over and above this, we had another 500 crores, which is there in ICD. So we were sufficiently buffered when we walked into a grim COVID-bound new year, financial year, because we were confident that we had sufficient liquidity with us. Today, as I talk to you, I will have to give you the number because I think our treasury guys are putting it, and I don't want to send. So I'm going to give some approximate number. After the recent NCD issue that we have done, we should be at about 5,200 to 5,300 crores gross debt. But that, ladies and gentlemen, is today, not on 31st of March. I repeat, that is today. And the net debt would be in the range of about 4,000 crores. So we are comfortably positioned. Our debt equity is still at about, if I look at it on net debt basis, and if I were to remove even the ICBs, because that is liquid money. It is not illiquid money, it is liquid money. So if I were to remove that, also our debt to equity would be somewhere in the range of 0.45 to 0.5, which is very comfortable as on date.
Okay, so I'm just taking the difference between the net debt number of, at the beginning and the end of the quarter. It looks like your cash burn plus capex. Capex I understand would be negligible, is around 2,000 crores. Is my understanding correct? Sir, if I take the difference between the net debt at the beginning and the closing quarter.
Of course. We have the cash. It is not cash burn. We must understand that we have creditors to pay. Okay. And we have to pay them, right? So that is not a cash burn. Cash burn, let me clarify, is what you incur as running expenditure.
Right.
This is working capital, right? So we had a negative working capital as on 31st of March, which means we had creditors to pay. We had 2,900 crores of creditors to pay. And we had some good terms with them, as well as in some cases, the larger cases, we said, let us work together on this. So we have been paying off creditors very significantly. So that's a significant amount. But as the production starts, what will happen is there are 2-3 things that you must remember. This is not a normal operating cycle. We have, in the last 3 months, we have the situation where we don't have any revenues. Of course, we started it quite early in May, where we did sell some vehicles. But what I'm saying is there is no normalized revenues coming in. So what do we have to do? We have to use the borrowings to pay off our creditors, and we have to pay off expenditure. But the major payment that has gone is predominantly in paying off our creditors. And that is what that is the reason you're seeing the net debt numbers going up. But as the business starts to pick up, you're going to get into the operating cycle. And more importantly, we must understand that while we are paying off our creditors, some of the state transport undertakings and government businesses and also export realizable, while they are all under LC and stuff like that, we will get the realizations only in the coming months. And all of them are, very reasonably well placed to make the payments. But these collections have also got delayed because of the confluence of factors, most important being COVID. So once that happens, see, at the moment, these are all estimates. I can't give forward-looking statements. I want to repeat that. But what we are estimating is that we will be able to realize our receivables shortly over the next maybe 60 to 90 days. We will, and then once the operating cycle starts, then we will see the money flowing into the company, and then that will be used for, again we will have a build-up of creditors as we inward materials, and then once the normal operating cycle starts to come in, you will actually see that the debt will start to get normalized and possibly go outwards. But let it happen, and we'll be happy to share the development.
Okay, and just two last questions from my side. If you can give an approximate range of cash burn per month when the plants were closed, and in Q1, we are almost at the end of Q1. Have you given any incremental intercorporate deposits to the group company? Just these two questions from my side. Thank you so much.
We have not given any incremental intercorporate deposit. The intercorporate deposit, I think I've already repeated it earlier, is 500 crores, not more. I hope that is clear. No incremental corporate deposits. The second one is the cash burn is predominantly the wage bill and then certain overheads. And we must understand, we are spending money and spending it wisely, and I'm going to hand it to the MD also to tell the initiatives that we are driving in the safety of the people. So we are ensuring not only the safety of ourselves, we are also ensuring the safety of our channels. We have to ensure that we make those necessary investments, and we are also supporting the community. So there is some expenditure which is also spent on that. But essentially, the cash burn is not very significant. It would be in the range of about 150 to 170 crores a month. But I think we are very careful about the way the money is being spent, and I must compliment the entire leadership and team of Ashok Leyland, but MD, for your perspective.
Thank you, Gopal. I think number one, and during this lockdown period, for us, number one was to ensure the health of all our employees, but also of the community around us, and we engaged very closely with both the government authorities and the communities around to make sure that that was adequately addressed. The second immediately was to constitute teams to ensure that there was no money that we were spending which was not required during that period except on health protocols and safety protocols. Now, there are teams, and Gopal is leading, like he did the K54 effort, something called a reset effort, which is looking at every opportunity to enhance revenues and be ready for it, to control costs and do whatever is required. So we are absolutely ready as the markets open up to run operations, run our sales, run our products in a very, very optimal manner.
Thank you, team. Keep safe.
Thank you very much.
Thank
The
you.
question is from the line of Bhaskar from ASK Investment Managers. Please go ahead.
Yeah, so thanks for giving the opportunity. My question is on the e-commerce segment. As we understand, there is a lot of movement that is happening and a lot of pent-up demand on that side. So how are we positioned on that part of the market in terms of our products, our engagement with those fleet operators who are out there in that segment? If you could give us some color on that part of the market, it would be helpful.
MD, would you want to take it?
Yeah, happy to do that, Gopal, and please feel free to add. I think it's an interesting question because not only was e-commerce important pre-COVID, it becomes even more important as we sit in our homes. Then goods have to find their way to our homes because earlier we were going to the market to buy them. We are very well positioned with, as you know, our LCV segments, specifically the Dost. Inquiries, I must say, are in good measure, let's say, have already started coming in. We are rolling out vehicles in our LCV platform. Our engagement in LCVs, as you see and you would know very well, is more and more on the retail side, and we are distributed very well with a very efficient dealer network through which these inquiries are coming in. Going forward, as I mentioned, in the next quarter, we'll further launch another LCV product right now on the code name of the Phoenix, which will further strengthen our position in the LCV arena. So e-commerce is a lot about the smaller vehicles, but we are very well networked on the retail side especially. As far as fleet owners are concerned, it's normally the larger, the trucks, which is the MHCV, but whatever we have, we do it with the fleet owners that we have known over decades. So very strongly placed and going to be even stronger going in another quarter.
All right. Right. And just to understand, what would be your market share in the ICD segment? Because I understand that the ICD segment is what works largely on the fleet operator side with the e-commerce players.
I'm not sure I have individual shares available. I'm not sure Gopal or Balaji have as well in terms of individual. We can have that sent.
Yeah,
Gopal.
we are at about. We have actually methodically grown. Thank you, MD. We have methodically grown our presence in the ICV segment. Over the last 3-4 years. This has been the strategy of the company. As I used to call it, as a slotting. We keep on adding slots into our product portfolio. And we are today at about nearly about 22%, 21 to 22% in the range is say 20 to 22% is in the ICV segment, which has been pretty healthier than the earlier past. Because you must remember, Ashok Leyland started as a heavy MTV, the heavy duty trucks. Then we moved to ICV, and simultaneously we have also done a very good job in our LCV business, where again the market shares are hovering at about 18%. We moved from 14 to 18%. So the strategy of the company is to retain the leadership through innovative products in MDV and enhance it. The second one is to grow our market share in the ICV business and grow our market share in our LCV business, not only by just pure organic growth, but also to ensure that the addressable market in which we are playing is higher in LCV. By the way, one final information that we wanted to say is we are truly well positioned in ICV because we have the largest number of offerings and variants in the ICV segment today.
Okay. Sure. That's it from my side. Thank you.
Thank you very much. Next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Service. Please go ahead.
Hi, sir. Congrats on reasonable numbers in this kind of environment. A couple of things. First is on LCV launch. Any timelines which you can share? And secondly, considering that we want to be about 2.5 ton segment, the addressable market beyond those is relatively small. So what gives you confidence of doubling your addressable market? Can you throw light on that?
Well, what was your first question? Sorry, what was your first question, Jinesh? And then I'm handing it over to MD.
So timing of LCV launch, Project Phoenix, and
okay. Sorry.
Yeah.
Please go ahead, MD. Sorry.
Yeah. I won't give you a precise day or date, if that's okay, because we want to make sure it's timed properly. But within the next 3 months, the model itself is ready. It's just that because of the current situation that we've decided to change the timing itself. So within the next quarter.
Okay. And what gives you confidence of doubling your addressable market, considering that the incremental product launches will be about those? That market itself is relatively small. So just trying to understand your perspective from that.
Yeah, two things I think, and it's a great question that you asked. One is the moment you add one more product in your portfolio or two more products in a portfolio that's already there, it gives the dealer a whole new strength to expand in the existing base as well. So the Dost is, the Dost itself is performing very well and gaining market share. For example, Gopal mentioned to you from 14% to 18%, and that's going to go up further. But this will bring a synergy across the LCV platform and range. And that's what gives us the confidence. We are already growing with what we have. That will just further multiply the way we will address the market.
Got it. And lastly, can you throw some light on the cost-cutting targets? So FY20 we saved more than 500 crore. FY21, would you be able to share similar targets?
I think what we are going through, and Gopal is leading this program, and we're not sharing any numbers if that's all right with you. Right now, we are in the moment of ensuring that we have a pan-company program which involves all of us, every individual, and each one of us has a plan going forward. We will put these plans together and address them at a suitable time. But be rest assured that every aspect of revenue, cost, and capex is being looked at with a fine-tooth comb so that it's not only about cost, but it's also about revenue enhancement and opportunities thereof.
Surely. Sorry, and one last question to Gopal. We have seen sharp reduction in other expenses. That's more sustainable number, or there are any one-offs there?
No, there are no one-offs. These are, what we are trying to do is to take the costs out, and we hope to sustain that into the new year as well. And that's what Vipin mentioned was about reset. And let's see as it proceeds. We're sure that we will get the numbers further down. There's a lot of work that's going on, to be honest. A lot of it.
Got it. I'll come back in queue. Thanks.
Thank you. Next question is from line of Pramod Amte from CGA-CIMB. Please go ahead.
Yeah, hi. This is with regard to the industry and how Ashok looks at it. Considering the new MD has taken up, sir, how do you look at industry phenomena of 20% discounts as compared to where you used to be in the construction space, which was really robust? And what will be your leadership would look at Ashok to behave in this industry?
Sorry. So there are two questions. Could you just repeat them one, and then I'll respond, and then I'll respond to the second one as well. Sorry, the audio went off for a bit.
Okay. So basically what I'm saying is you have come from the construction equipment space, which is much healthier and a different behavior as compared to CV or M&HCVs to be precise, which work with increased discounts as high as 20%. So how do you see this phenomena as an industry player, as you had the second largest player? And will the Ashok behavior change under your leadership on this discounting phenomena?
That's a great question. One, Ashok Leyland has a tremendous heritage, as you know. It's a 70-year-old company, great employees, great heritage, great shareholders, and all of that. So what, as a managing director, I can only do and work with an already excellent team which is in position. But when you talk of specific discounting, and I think as an industry we have to be more and more responsible. Now we, on our own, what we plan to do, perhaps, okay, I might preface that, but perhaps there was, let's say, industry-wide discounting, and Ashok Leyland did not participate in a big way. We chose to actually to walk away at many times during the last 6 months or so from deals. But maybe it was to do with excessive stocks that some companies were carrying. Going forward, with the Avatar launch, we are focused on value selling. And value selling in terms of modularity, the advantage that it gives to the customer in designing his or her own product. Back costs will come down because there are fewer components, and therefore the supply chain becomes more efficient. And then making make to order, we actually will have a sales configurator through which the customer can actually configure his or her vehicle. We will focus on selling value to the customer, and we also believe, as I mentioned, that we have the best total cost of ownership. That's our belief, total cost of ownership, and within that, the best fluid economy, which is the combination of diesel fuel combination as well as AdBlue. I think we offer the best. So we will sell value as much as possible.
And would the focus still be on market share? Because that's one of the key reasons why the discounts are rampant.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्यांनी तुमच्या कॉलला होल्डवर ठेवला आहे.
Sorry, can you hear me? Yeah. Okay, so back to you. Market share is always important. The question is, we would not buy market share. We would earn market share. Earn through the people in the field, through the product, and through service. And that's how we will be looking at gaining market share. Importantly, at the retail level, the retail market share. Hello?
So the line for the participant dropped. We move on to the next participant.
Yeah.
So are we still on?
Yeah, we are on, right?
Oh.
Yes, sir. Next question is from the line of Ashwani Kumar from Nippon India Mutual Fund. Please go ahead.
Yeah, good morning, sir. My question to Mr. Sondhi, just wanted to understand what is your thought process on exports and what is the company doing to further move up the quality curve and specs so that you can address that market? And second, what opportunities do you see in participation in the defense-related products indirectly through the trucks in coming years?
Yeah, Ashwani ji, namaste. It's a great question. So let me answer the second question first, because defense is also a matter of pride. It's a matter of participation at the borders, etc. We have been, I think, the longest and the largest logistical supplier to the defense through the Stallion.
Yeah.
We continue to supply VFJ kits, which has been reinitiated, and this is a steady stream of business. We also now are looking at, there are opportunities opening up on retrofitting, and there are opportunities opening up on spares. And we will definitely look at this some we are already participating in, but we will definitely look at it very carefully. We have a separate defense vertical, which reports in to the chief, one of my colleagues who's a chief operating officer. So defense remains an important portfolio. Coming to exports, if you look at our vision, Ashwani, the vision is to be a top 10 global CV player. That vision cannot be accomplished unless we spread out into geographies which are outside of India as well.
Yes, sir.
So the first steps, and we've already taken these first steps. You're aware that we have a plant in the Middle East.
Yeah.
We have initiatives in both Middle East and Africa. We will continue to spread our wings and give a thrust. Now, how are we doing it? We are doing it to the fact, first, you need both left-hand drive and right-hand drive. So the Phoenix, which will be launched, will have both options. So that opens up new markets. The Avatar is, let's say, protected by design to do both. So that's something that we can initiate as well. So we've kept that option open as well. And finally, we are strengthening our dealership positions in the geographies that are naturally inclined to the Indian market, which I mentioned, which is Middle East, Africa, and of course the SAARC region. And we are very strong in the SAARC region. And we've opened up conversations even during this period because borders are shut largely. But we are in conversation with all our major stakeholders in each one of these countries on a virtual platform.
And sir, in exports, can you increase market share in MENA region? I mean, do you think there is opportunity for you to scale up with new products and, more entry into the lighter vehicles and higher market share in the buses and the truck segment there?
So the answer is yes. But which did you say? Which region? Sorry, I missed that.
MENA. Middle East and North Africa.
MENA.
Yeah.
Oh, okay, that's
Middle East, North Africa.
So the Middle East, of course, we have a bus making facility. North Africa is interesting because a lot of North Africa is French-speaking Africa.
Yeah.
So we are, for example, we are in touch with some of our stakeholders in the Ivory Coast. which is a little northwest, if I might think correctly. So the opportunities exist, and this will be, let's say, a major thrust area for us over the next 5 years. So I wouldn't talk about a 1-year plan, but a 5-year initiative.
Certainly, sir. Yeah. Thank you and wish you the very best.
Thank you very much. Thank you.
Thank you very much. Next question is from the line of Priya Ranjan from Antique Limited. Please go ahead.
Yeah, thanks for taking my question. One is on the just continuation of the last question. Predominantly, you have been strong in the staff movement of the Middle East region. So, which is actually a lot of people are coming back to India and all. And even the oil prices are not so great. So, how do you see that your core market in Middle East is going to remain like that, or is there a risk that your core market, which you were trying to has actually will actually shrink over a period of time? And if that is there, then how do we address that in the Middle East?
Yeah, no, it's a good question. I think you also are very perceptive in the way you ask that question as well. We are stepping up through the launch of our BS6 and other capability in terms of buses, in terms of styling, etc., to ensure that we move up the value ladder in the Middle East and not be confined to the particular market that you're speaking about. So buses is a thrust area for us, and buses in, let's say, more sophisticated markets like the Middle East is another thrust area for us. So we'll be stepping up the value chain as far as buses are concerned in those markets so that we don't remain in any particular segment.
Mm-hmm. And sir, in terms of domestically also, when we have looked at the different segment of market share, I mean, typically your market share has been slightly lower in the tipper side. So as you speak that probably the tipper is one segment where your market share, the market is expected to recover faster. And even the ICV, because of the the e-commerce, etc., ICV segment is also going to be slightly higher. Even in that segment, your market share is slightly lower compared to overall market, overall MNHCV side. So how do we read your market share trend? Can we think that your market share, because of the market mix moving in, say, next 1 year, the market share will be slightly weaker?
I don't think so. And I don't think that with the Avatar platform, actually is just the reverse. With the Avatar platform, we've converted 3 platforms to 1 platform. And I think we'll come out much stronger even in tippers and ICVs and we'll actually gain market share. So I think we are confident that we will continue to enhance our focus in both ICV and tippers. Long haul will always remain core, but we hope and expect to gain market share, and that's how we're getting ready along with our dealerships, customers, engagement with fleet owners, operators, those in the construction industry, many of whom we know. So in that sense, I think we are looking at it as an opportunity with the Avatar platform.
And in terms of, say, what can you just elaborate? Gopal, if you can answer, how much was the truck and buses revenue in this quarter, and how much is spare parts, etc., and the difference in this quarter?
Priya Ranjan, I will give you all the details, Priya Ranjan.
Okay, sure. Okay, that's all from my side. All the best.
Yeah.
Gopal, we've got the other engagement as well. Yeah.
Yeah. Can we wind up?
That was the last question for today. I will now hand the conference over to the management for closing comments.
Okay, first Gopal and then I'll go. Hello? Okay. Sorry, Gopal, are you there?
I'm sorry, there was a problem. Yeah. Thank you very much, everyone. Thank you very much for the interest in Ashok Leyland and taking time off under such challenging circumstances. I believe it's been a very healthy participation. Thank you to MK as well, MD, for the last few words.
Thank you very much, and thank you, Gopal Balaji, my colleagues, and thank you very much to the entire investor community for your interest, and be rest assured that we are doing everything that is required in terms of products, in terms of people, in terms of costs, and in terms of revenues, looking at all opportunities, and we've got some really positive things to speak about and go into the market very strongly. Thank you, and we look forward to remaining engaged.
Thank you.
Thank you very
Okay.
much.
Thank you. Bye.
On behalf of Emkay Global Financial Service Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line. Thank you.